Good afternoon, everybody. Today is Friday, the second day of September 2011. This is Brian Shannon speaking. Let's take a look at these markets here. We had really quite a wild week for the week. The S&P was down 0.1%, so basically unchanged, but we had that big rally that occurred as we broke past this resistance. And yesterday we were in a tricky spot as we were looking at this market thinking that, well, if it fails here, then it could be in big trouble because the important prior level of resistance that we had was seemingly holding as support, and we had that rising 5-day moving average in here as well. Well, obviously we had the jobs report this morning, and people didn't like that. The market was already down on Bank of America news, and then the jobs report added further weakness to it in the pre-market. We can see that here on the 1 minute, on the 1 minute chart of the S&P 500 futures. So we had this, crazy action in here and a quick sell-off, but overall, again, we're barely changed for the week, which is not what you would expect based on just the last couple days worth of trading. But we did break down below that prior level of support. We broke down below this important level as well. So now we've got to look at this area in here at about that 118.75 area as where the bigger near-term level of resistance, most relevant level of resistance is, I guess I should say. We're also, let's take a look at the 10-minute time frame here, because we can see we're kind of right on that trend line as well. And when we take a look at this most recent move higher, we came down to about the 50% retracement. So this level, if we can stabilize in here, we're just going to remain a mess. This market is a mess. It's been a mess for the last 6 weeks or so, and we've got to just get used to all this volatility or just step aside because it doesn't appear as though it's going to change. Now the market, maybe it's going to try to stabilize because we've got that 50% retracement level, and we've got this 20-day moving average in here as well. But you take a look at the Nasdaq, which got right up to that 50-day moving average this week. I mean, touched on it, and I think it went 3 pennies through. But this market, the Nasdaq, that is, we had kind of similar thing. We were at an important level that was known. We had a big catalyst today. I didn't think it made sense coming in with a position, and then when you gap down like that, the thing that most people look for is a bounce opportunity, and we simply didn't get much of a bounce opportunity. Early on there was a little bit, but it didn't amount to much of anything at all. And obviously, the market, the S&P 500 as well, the way that these markets traded today was it just looked like it was going to be a watch the paint dry type of session, and then we did get some more weakness in the afternoon. Back to the Nasdaq, though, let's take a look there because we also have this trend line in the Nasdaq, almost really touching perfectly on the move from these lows right in here, or that trend line, and right about that 50% retracement level. So there appears to be some order, at least to where we're slowing down for now. It doesn't mean that these things are going to hold, or we're going to get a big bounce. But if we get a bounce up, we'll be keeping an eye on 54.5 and this 5-day moving average, which should start to decline, and we'll be looking at that as something that's likely to hold as resistance. The Russell 2000 down 3.7% today. That's a pretty good sized hit, and this market was showing a little bit more weakness than the broader market yesterday, that is on Thursday. We had already tested these two levels of prior resistance and gotten through them, but yesterday we dropped back down through those two levels and closed below the 5-day moving average. So when we look at the Russell 2000, we can draw a trend line off of here as well, pretty much hitting perfectly upon that. For the week, the Russell was down just about 1%, whereas the other market, the Nasdaq and the S&P, were down about just a small amount. Actually, Nasdaq was up 0.28% for the week. But the Russell 2000, again, we're coming down. We're right at that trend line, and we're, in this case, You can see we've given up more of the gains. We've come down to the 61.8% retracement Fibonacci retracement level, and looking at the daily time frame, we're also below that 20-day moving average and the 10-day moving average. Now the 10 and 20-day moving average are crossing, which generally I look at that as indecision. That when moving averages like that cross, it means indecision. Well, we didn't need to know that we didn't need to see a moving average cross to know there's a lot of indecision in this market. There's a lot of danger still, a lot of headline risk, and that doesn't seem like it's going away. So until that does, what we have to do is just really maintain a very short-term focus on our trades, I think, and because bulls and bears alike have been experiencing huge whipsaw in this market. And if you have some more flexibility and you're aware of these key levels, the market does seem to be finding some kind of order based around these technical levels, and it gives us one little edge in the market. Obviously, the fundamentals don't change as quickly, or don't seem to change as quickly. When they do, they bring about an event that we can measure based on technical analysis. But the technicals really, a lot more people begin looking at charts when you have this type of volatility in the market, and they start trading around those levels, and that's what leads into that kind of self-fulfilling type of prophecy. Anyways, these semiconductors, they've been really the weak group. They couldn't get up to that $30 level. It seemed like maybe they were going to, based on some strength in other areas of the market. We'd fought a couple of pretty decent levels this week that we got past that first level of resistance. Then we got past this prior support area, which was also resistance back early August. So we got past those levels, but they came crashing down. It came crashing down through them, and really, you look at it, we're now on this trend line. The semiconductors on this daily chart, really, you could make a case that what we're looking at is a couple of bearish flags, and we're headed for another move lower. Then you look at the weekly chart and say we are in an important level here. So a lot of indecision is really the way to look at it, and you have to take a look at it, unfortunately, on that shorter term basis, because that's where the more logical look to these charts comes in. The daily charts, obviously, they're busted. They're broken. As I was saying, trying to call double bottoms and that sort of thing is completely foolish. We're in a process of maybe best case of turning more neutral in here, but you look at these financials. The financials, there's no trend line holding these guys up here. They were down to the trend line yesterday and smashed through it on that gap this morning and closed right down near the lows as well. You look at this 30-minute chart. We knew that this 1320 level, it was broken on Thursday and held below that 5-day moving average. Obviously, the gap lower this morning just destroyed it. So we're probably headed down to the low end of the range near $12 before this thing kind of settles in, and there's nothing to prevent it, I don't think, from continuing even lower. You look at this weekly chart and you see how big this level is in here, that this prior support at the 13 and a 1340 level. Well, we broke down through that. We've tested it here. We've got a declining 10, 20, 30, 40 week moving average. This is on a weekly chart, this is a bearish environment here, and it's possible, I think, and maybe even likely, that we head down towards that $10.50 level. So if that's going to happen, obviously it's not going to be viewed bullishly by the broader market. And the S&P, same thing, got back, tested that prior resistance. Now we're backing away from it again, and we're probably headed at least drifting down towards that 112, 113 level. So it remains a very treacherous market. Anyways, try not to think about it too much for the next 3 days. Enjoy your time off, and hope you're doing something fun and safe, and we'll talk to you next Tuesday. Thanks.